Hi, everybody, and welcome to this week's Silicon Insider podcast. I'm here with Scott Budman. Hi, Scott.
Hello, Mike.
How are you?
I'm very good. Thank you.
Good. It's been raining like hell here.
Yes, it certainly has.
You get out of your car, and the running water pours over the top of your shoes. So uh, let's get to it. So first thing I want to talk about is Wall Street. We're gonna move all around this episode. Wall Street earlier this week set a new record. At least the Dow Jones did, and the S&P got up there. Now all of a sudden today, everything dropped. Uh, there was profit taking, but there was more than that. I mean, the Dow Jones dropped a lot, and let's see, the S&P 500, 11 sectors, nine of the 11 sectors were trading in the red today. Uh, and the reason, kind of complicated, but it has to do with the shutdown. After 40 days, almost nothing economic has been reported out of Washington. And so, in preparation for this, any surprises, Wall Street's been kind of rotating out of high tech stocks all month, but most most today and yesterday, and they're getting into safe, predictable stocks and not the high flyers. At least that's what's being reported. So we'll see. There's another factor involved, and that is next Wednesday, Nvidia, the bellwether of high tech stock, high flying stocks, reports its financials. So, what do you think? Is this a long term thing? Is a bubble breaking, bursting? Is it just profit taking? Is it lack of information and the information's is going to drop as much as they? I mean, some of the information, the indexes and all, and findings and reports from the last 40 days, they say will probably never be reported. But there may be an avalanche of new news and surprising results that have everybody being careful. So, what do you think it is?
Well, I mean, I don't think we can jump to too many conclusions here. When you say today, by the way, for anyone listening, we're talking Thursday night at the end of trading, rough day, down 800 points, 24 hours after an all-time high was set on the Dow, and everything was soaring. And so, yeah, there's a lot of profit taking. The other is concern about what happens next with the government and the fact that we have not gotten those, reports, those updates on jobs and things like that. Also, there's concern, as we've seen with some of the earning reports from companies like Meta, that, gosh, where will money come from to pay for all the staggeringly large investments that you're making in things like AI? Some of that is coming due in the way of investor concern. And that's why we're seeing dips in stocks like AMD and Oracle and Nvidia. But I don't know how long this lasts. We have talked about the popping of the AI bubble at least 5 or 6 times before, only to see it go even higher. And again, we're 24 hours away as you and I speak from the last record that was set on the Dow, which was 48,000. Some of these numbers are just
8,000.
eye-watering. Yeah. And so I don't know if it's anything to, let's check back in a few weeks. But day to day, the only thing we do know is that this market is not for the faint of heart. The people that have made a lot of money have been willing to stay in through real ups and downs as this AI bubble, and I think it's safe to call it that, is still getting larger and larger. But think about it, to say a bubble has popped, would stocks be down 1.5 to 2%? No, this would
No,
be a
maybe
real
down
scary, right?
20%. Yeah.
Right. So that hasn't happened yet, if it's going to happen at all. But I think, given these valuations, some investor concern just makes sense. I mean, goodness, these numbers are so high.
Yeah. And the rule is, you never hold out for the last 20%. You know, get out when while you still are sane. Now let's talk about Nvidia next week. some predictions by analysts are holding that Nvidia is going to see about a 50% increase in revenues year by year. Does that sound reasonable to you, or do you see anything to cause doubt?
It's interesting because Nvidia on its own has continued to just kill it. But what really gives me um, thought that Nvidia will come in with strong numbers is what AMD and Lisa Su just said in her speech earlier this week, talking about how they are booked up for a couple of years with AI and chips. And they are admittedly not the top gun. That is Nvidia. And it just seems like, for better or worse, Nvidia is selling and selling everything it can make at top dollar. And so I don't see how they would A, miss their estimates, or B, fail to give investors what they want, which is an optimistic future. But that's the one thing that would slow this down, is if a company like Nvidia said, all of a sudden the future is looking kind of cloudy and we're not sure if companies will continue to buy all these super expensive chips.
I don't think I'd ever seen Lisa Su of AMD on television. And then all of a sudden this week, she was all over the place. Maybe it was that speech she gave, but maybe the market and the media are picking another winner because she's coming up fast and she's seen now as, I said last week that the biggest threat to Nvidia was Google and its devices, its semiconductor devices, but this is a real semiconductor company uh, going great guns.
Right. And there are a few of them now, and we've talked about them, and there clearly is enough business to go around. And that's often what happens when some technology gets super hot and you see startups and you see companies that are gaining ground, but really the bulk of the money tends to go to a few big companies. And
Yeah.
that's what we're seeing in AI and in chips right now. But look at the spreading, look at the chip equipment stocks, look at your Lam Researches and your Applied Materials. I mean, not to mention your Broadcom. There's just so much wealth right now because of Nvidia's investments and OpenAI's investments and the public buying stock. And it just feels, dare I say, frothy. But right now, it's just done nothing but go up for months and months and months.
Well, I'm going to quote you about somebody else saying frothy. Uh, the guy from Big Short, investor Michael Burry.
Sure.
He's been known for his successful bets against the U.S. housing market in 2008. Well, he's actually deregistered his hedge fund, Scion Asset Management, just the other day. And his explanation was, well, he didn't give much of an explanation was, but it manages to $155 million in assets as of March. And they've long dissected for hints of looming bubbles and signs of market froth. That's a quote, market froth. Uh, in a post on social media platform X on Wednesday, Burry said, on to much better things November 25th, but he did not respond to requests for comments. He's begun criticizing the high tech stocks, especially the technology heavyweights, including Nvidia and Palantir, in recent weeks, questioning the cloud infrastructure boom and accusing major providers of using aggressive accounting to inflate profits from their massive hardware investments. Okay, I'm quoting that, but when people start getting accused of messing with accounting, you harken back to 29, you harken back to all sorts of shady practices. If he knows something, and this is a guy that has his ear to the ground, if he knows something about shady practices, are we going to see a scandal coming any day now? I mean, he's saying November 25th. I mean, he's decertified, which is he's terminated it. His relationship as with the Securities and Exchange Commission. I mean, what's going on there?
I mean, the rumors with him is that he's going to start a podcast or something like that and get into more of a media thing, which is almost too bad because we need, if not a Cassandra, we need someone to just cast a skeptical eye. I guess we all do with this AI frothiness, but he's done it unlike the rest of us who do it with a little bit of data. He does it with huge money and investment. And certainly he hit that grand slam home run. If you haven't read The Big Short, it's a fantastic book. I've read it twice. If you haven't seen the movie, it's a fantastic movie. I've seen it at least 3 times. I mean, the story of him and the housing mess in 2008 is just amazing. And, the great book by Michael Lewis. But he's been shorting Nvidia for a while and has been wrong for a while. But the Palantir one was interesting because he came out against Palantir, and that really hurt the stock on the same day the company had an otherwise strong earning report. So even the hint of criticism at what's going on with a company like Palantir seems to be enough to shake investor confidence a bit. Whether or not we're going to have a full-blown crisis like 2008 that he was ahead of, I just don't know.
Well, speaking of 2008, I'm into segues today. Uh, New foreclosures jumped 20% in October, a sign of more distress in the housing markets. And well, foreclosures were 20% higher than the year before. Completed foreclosures, the final phase, were up 32% year over year. And this is most apparent in Florida, North Carolina, and Illinois. Uh, are they connected? Is there any synergy between The Big Short, and foreclosures suddenly climbing like that?
You mean The Big Short of 2008?
Yeah.
It's hard to know. I think that wasn't just people buying houses that, they were over their skis on. It was also all of the investments and packages that the banks were putting
Yeah.
together. And I don't know that those still exist. If they do, shame on the banks because they just haven't learned. And of course, there are always going to be people who overextend their credit with all that. But I don't know. The valuations of homes having gone up and up and up, you'd think what would lead to people in financial straits selling more often and therefore putting more homes on the market, which really we need as a society. We need more homes on the market, more inventory to people to buy.
Yeah, but these
And
aren't
we really
homes.
haven't seen
These
that.
aren't homes for sale. These are foreclosures.
Exactly. And the idea that people would be foreclosing right now would portend bad news. I'll give you that because we've seen layoffs. We certainly just had a whole month of hundreds of thousands of government workers that didn't get paychecks even while working. And look at the DC and Virginia real estate market right now. It's struggling. And so this could portend another crisis, and housing would be leading the way, which would be a bit of a, swerve for our economy where everyone is expecting this absolutely crazy stock market to pop and lead to problems down the line. Maybe some of those problems are already there. And you're right, this does portend something to be concerned about.
I mean, don't you see other signs too? I mean, the president is talking about 50-year mortgages, and things seem to be getting looser. I haven't seen most banks hand out mortgages like candy like they did in 2008.
Right.
But you
But
get the feeling that we're forgetting what happened. We've got a generation, and each generation has to rediscover how to screw things up.
you're absolutely right. And I believe that you're right. We have forgotten. The 50-year mortgage does feel a little looser. It may be a response to people saying, gosh, with a 6.3% interest rate and housing prices climbing, not just here where you and I sit in Silicon Valley, but all over the country, it's intimidating, especially for young people, to buy a home. Mike, the average first-time home buyer right now is 40 years old.
Yeah.
Think about that. The average first-time home buyer is 40 years old, not 22 or 25, but 40. And that's really sad. And a 50-year mortgage says, okay, you can get in for a little less money. Is it a good idea? I've done stories on this. I've interviewed people. The consensus seems to be no, it's not a really good idea because, my goodness, not only are you in debt for a longer time, but you end up paying much, much more for the home. That said, a populist political response to an intimidatingly high monthly payment is to do something.
Yeah.
To A, give you equity, and B, give it to you with a lower monthly payment. And I think that's what this is, for better or for worse. But it tells you how concerned people are with the idea of what was once, not that long ago, kind of an automatic thing. You get a job, maybe you get married, whatever, you get to be a certain age, and you're able to buy a home. And now you talk to a whole generation of young people, and that's off the table. They're thinking, I'll rent for the foreseeable future, even if I'm making good money, even if I have two good incomes.
Yeah, maybe a 50-year mortgage is a bad idea, but on the other hand, you get into a home,
Right,
which is
right.
beyond reach. I mean, it's Gen Y that's really driving all this because they don't think they can ever afford to raise a family or buy a house. I mean, and they look at their not their parents, but their grandparents and realize they got married at 20, bought a house on one salary, and had four kids they raised in that house. And, you know, only one person had to work. I mean, look, it seems like an impossible scenario to, Gen Y now. And I'm sure for Gen Z, they're looking ahead and seeing this disaster looming in their life, and they're not allowed to grow up in a sense. They're going to be beholden till they're 40 years old.
Well, it's hard because, right, if you don't have equity and you're constantly paying rent, you're on that wheel. Let's say you have some debt because a car, a student loan, whatever, your credit card, it can get to be a cycle that's hard to break out of. I totally understand that. And the super high housing prices, combined with, relatively high mortgage rates, the boomers, the people my parents' age will say, well, goodness, when we bought our home, it was 14, 16, 17%. I get it, but the homes were much cheaper. But still, you
And they
combine
don't
a
add that
six.
they don't add that the house cost $20,000.
Right, exactly.
Yeah.
Um, and anyway, so I get it. It is intimidating. And that is why, even while some are enjoying the fruits of this outstandingly strong stock market and look at all this AI economy, there are still plenty of people, I would say the majority of people, who are concerned about their financial future because of the high cost of living.
Okay. Next, Tesla. Tesla's AI boss tells us staff that 2026 will be the hardest year of their lives. He held an all hands meeting, which, suggests he's serious, that it's going to be the hardest year of their lives. Tesla stock fell 6.6% today, but even more interesting, since Elon got his $1 trillion pay package, Tesla's stock has fallen 10%. You think he's ever going to get that pay package? All 12 points?
Well, hard to say. I mean, Tesla stock would have to reach what did we say, like $8.2 trillion dollars in market value?
Yeah.
That's a lot of
But
not only cars.
I wonder if he's going to reach any of the benchmarks now. I mean,
I mean, I
those
wouldn't be
benchmarks.
surprised but look, the market value for Tesla is still kind of preposterous given that it sells cars. The idea that it may someday sell robots, um, I don't quite understand how that justifies for Tesla what is now a 1.3 as of Thursday night, $1.3 trillion market value. And yet the stock is up since Trump took office. The stock is up since, I mean, again, it's just hard to bet against Elon Musk, but the valuation is far too high for a company that sells cars.
Well, they're kind of operating around the wimpy principle, aren't they? They'll gladly pay you Tuesday for a hamburger today. I mean,
Is that a Popeye reference right there?
they're going to pay off big. It's going to be $9 trillion. You betcha. Just wait, and we'll do it by year's end.
Yeah, I mean, but that's like saying Tesla will have a fleet of 10,000 driverless cars in the Bay Area by year's end. I mean, the promise of time is just not something you can count on. But look, long-term investing in this company has done nothing but made people money. So there is this Tesla premium, this Musk premium, for whatever reason. And I mean, we know the reason. Investors think he walks on water.
Yep. Okay. Let's see. Well, the timelines have been reset for both the Optimus robots and the robo taxis. So they're going to try for it, and maybe they'll do it. Maybe, he's done miracles before. Even if he doesn't reach his pay package, if he can sell any kind of numbers in the taxis and the Optimus robots, he's moving on to the future, and he will remain the richest man in the world. So we'll see. I have a hard time believing that he can. He's juggling a lot of balls in the air, and he's been doing it for a while. But he's going to drop one of these days, and you fear that he's going to drop all of them once that happens. So let's see where he's going. Also, finally, great news. Oh, by the way, uh, Jensen Huang has been pushing contract chip maker Taiwan Semiconductor TMSC uh, to get add more production capacity to make chips. So he's looking ahead, and he's optimistic about if he needs more chips produced quicker. He's very optimistic about the future, and that's not based on the contracts he has, but the contracts he thinks he's going to get, and we don't even know about. So that's a good sign. Let's leave. Let's hope China doesn't get aggressive. Okay, and finally, great news. PepsiCo announced on Thursday today that its Cheetos and Dorito brands will be offering colorless alternatives, and these will be known as simply NKD, which stands for naked, and they won't have that, you know, radioactive orange color. And well, that's basically it. They look like shit, but they're good. They're better for you. So look for your Cheetos, and we'll see you next week. Oh, we're reinventing our iconic and most famous brands to deliver options with the bold flavors fans know and love. Now reimagined without any colors or artificial flavors, which is essentially making making good news out of bad. So they're not going to taste the same, and they're not going to look the same, but it's a milestone moment for both products. So
RFK.
look for your in your local grocery store or supermarket. And that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area. And we'll see you next week. Bye bye.